Good evening, traders. It is Tuesday, March 24th, and we are about 5.5 hours after the close today. I want to do my weekly swing trading video a day early. This is a management decision. I like what I saw in the market today. I feel that if a stimulus package gets done sometime tomorrow or the next day, we're going to see these option implied volatilities collapse. I want to take advantage of these astronomical IVs right now. We are just one day off of a 3-year low right here. You can see how we made that low yesterday, Monday morning. Today, we spent the day rallying. We gapped higher. We closed near the high. I'm expecting to see more follow through buying, and I do not want to wait not a minute for this series of trades. So let's take a look at VXX, which incidentally, the S&P futures are down overnight about 20-25 points, just marginally. Look at the sell-off in option implied volatilities. This is the VXX just getting crushed. Well, look at this rally here. Who would have expected it to go up to 76? Just unbelievable. But it's coming in, and it's coming in hard. So we need to strike quickly. Last week we nailed it with our 4 trades. We're going to take a look at that. We were able to get in on all 4 of them. We took advantage of really, really high option IVs. A little bit scarier conditions last week than this week, in my own opinion, even though we just came off of a new 3-year low. Look at the option IVs come in, even on a 3-year market low yesterday. These premiums are going to come in big time because they're so exaggerated. They're so inflated. So we want to jump on that opportunity. What's the market look like overall? We can expect plenty of bumps along the way. And so that's why we have to make sure that our stock selection is incredibly good. You've seen these 4 stocks. I also posted SHOP as a really good put right, just out of the air, pulled that one out, decided to do a video. ZS was another one that I did yesterday morning. Beautiful trade. Right out of the gate, the stock ran higher. You might have had to scramble to get those option premiums, but I do know in the chat room, somebody posted they got the trade done at $2, I think we're trying to get for those puts. So you better get the orders that I'm showing you tonight working before the opening bell. Don't stand around watching what the market's going to do. You got to get these trades in early because these prices won't be there long, and we're going to see these option implied volatilities come in on the first little rally. These premiums are going to vaporize. So you got to get the trade out there early. We hope that we get assigned on these stocks. I hope there's another market speed bump. If we can buy these stocks at the prices we're looking at, we're going to be very, very happy 2 or 3 months from now because those stocks are going to run and we'll be able to sell calls against that position. So let's hope that we get assigned. I don't think we're going to be able to. So let's get on with it. Let's take a look at what we had last week. So one more thing about the market. Yes, we're going to see some more bouncing and tests of this low. I'm expecting to see higher lows. I think that the coronavirus is going to be less of a threat in another week from now. Once we get the base, once all the tests have been completed, people are going to understand that it's widespread. Not everyone is getting sick, not everyone is dying. And right now, I think there are about 650 deaths nationwide. So you can see, yes, there are deaths, but if you compare that to other flus and viruses that have been around, this is not catastrophic. In Italy, they've had the death rate decline 2 straight days. They've had the number of new cases decline for 2 straight days. South Korea is getting back on its feet. China is completely back on its feet. Hubei province has been opened up. All the traffic is resuming. The restaurants are open. China is getting back to business. We got the treatment coming in with the hydroxychloroquine and the Z-Pak. So Mylan Labs and Teva Pharmaceuticals are ramping up production. I think this whole virus thing is going to blow over in probably another 3 or 4 weeks. Are there going to be more cases? Are there going to be more deaths? Yes. Is this sheer panic going to dissipate? Yes, I believe so. I'm banking on it. This is the time for us to strike. So let's take a look at last week's trades. You heard similar commentary from me last week. Cisco, we're selling way out of the money puts way below this $33 strike. Look at the stock moving higher. Love it. Never an issue. Great trade. Yes, we've got about 4 weeks left till expiration. Not expecting any problems. Look at Facebook. Beautiful. That's going to be a great winning trade. Google off the deck. This stock has to fall 50%. We sold the $650 puts for $6. Look, it's at 1134. That stock has to get halved in the next 4 weeks. You think that's going to happen? Nope, I don't think so. Gosh, if it does, I'd be a willing buyer at $650. We're never going to get the shot. Twitter, look at it start to move higher. Beautiful. Sold those way out of the money. I can't even recall what the strike was. I think maybe the $15 puts for 75 cents. Unbelievable trades, unbelievable prices. We have to strike while the iron is hot. So, let's take a look at some good stocks right now. You know that we got to pay attention to balance sheets right now. I'm going to keep this video short because I have to render it and I've still got to get it out to all of you. You all have to watch it. You got to get your trades in before the open. So let's get moving here. What I did was a very simple search. You saw me run this yesterday. All I did was I marked D1, H4, and H2. I want to see a trade signal on those 3 time frames, and I also want to see relative strength on those 3 time frames. So I also want to see some decent option liquidity. So it's at -2. Well, Pete, you usually go with a 3 option liquidity. Yes, I do, but one of the metrics that I use in calculating that option liquidity is the bid-ask spread in the options. And right now we're seeing mile-wide bid-ask spreads. So all of the option ratings have declined because of the conditions out in the marketplace. So we have to adjust a little bit for that. Plus, I want to let as many candidates in as I can. Pete, I like to do credit spreads. I don't like to sell naked puts. Okay, fine. See if you can structure a trade. I'm not going to pay for expensive out of the money implied volatilities, and I'm not going to try and navigate 2 mile-wide bid-ask spreads by doing a bullish put spread at this time. I just want to navigate one, and I want to sell naked puts. That's my strategy. Can you do something else? You betcha. In fact, watch these stocks tomorrow that I'm highlighting. They're going to make great day trades. I like these stocks. They have a buy signal and they've got good relative strength. So even if you don't sell the naked puts, make sure you're looking at these stocks as good day trading opportunities. I like all of them. I know I'll be in on some of them. In fact, I found a couple of others that I really like too, but I want to keep this short. So let's go. I went through and I clicked through all of these different symbols here and I brought up the stock ER, which I'm going to do right now. And then you'll be able to follow along, and I'll show you the ones that I selected. The main thing that we want to look for is not a super high PE, and we want to have a lot of cash per share. More cash per share than debt per share. That tells us that we'll be able to weather the storm and that these stocks will be able to get through this little credit crunch that we may be having. So as you continue to come down and look at the list, I'm going to go to the first one, which is, and I don't see it in here. Anyway, I'm going to take this off and I'm going to go right to the stocks. This is how I found them though. And you'll see this whole list right here. You can run this search yourself. I'm going to move that off and I'm going to go in and we'll look at CRUS because it's the first one. Going to go into my list, which I created March 24th. CRUS is the first one. Look at this strength right here. Put up that 1 OSI indicator. You're going to be able to see on a daily basis, this stock has been fantastic. Look at that. The market comes in hard. What does the stock do this week? Yesterday, mind you, was a new 3-year low. Look at the stock. It's not making a 3-year low. It's way above that bullish hammer right here. Actually, it's not a bullish hammer, but way above that price right there. So it's already been finding excellent relative strength. Well, how are we going to play this one? Let's take a look at that stock ER. Look at this balance sheet. $6 in cash, only $2.50 in debt. What do? They make parts basically for Apple iPhone. So they make the little uh, wheels and all the interfaces, the user interfaces for a lot of the mobile devices. So we've got a really nice rally off the low right here. We've got a stock that's trading at a reasonable forward PE of 15. Again, these PEs that we look at are going to come in because earnings are going to get hit hard. That's why the market has fallen. It's expecting bad news. But we know they got plenty of cash to weather the storm. Really good fundamental rating here. So we want to go down to this lower level if at all possible. So I'm going to go to the order entry screen here, and I'm going to take a look at CRUS, and you can see how we'd love to sell at that $50 strike price right in there. If we can get down to the $45 strike price, we'd like that even more because that's where that tail is. And we want to try and avoid assignment if we can. Okay, so that takes us above 47. I think it's 47 was the 47 was the low. So $45 is below that low. We want to sell these puts right here, and we want to try and get 80 cents for them. Now I'm going to go into staged orders because I already have these ready for you, and I just want to confirm that price. Yes, I've got a limit at 80 cents on the April 17th expiration. Everything that we're doing tonight is April 17 expiration. That is a normal expiration date. We want to get 80 cents for it. I was hoping to get 90 cents for it because that would be a 10% return in a month, but let's not get greedy. Let's take 80 cents because we're not quite there. We need a little bit of a market pullback to get filled on this one. Also, some of these others will need a little help. That's why I'm putting 5 of these out there. I hope that we get filled on 4 of them. So in any case, we're selling the CRUS April 17th, $45 puts. We're trying to get 80 cents for them. And we'll take a look at that. They are currently 50 cents bid, offered at 95. So we need the stock to pull back just a little bit tomorrow, and it looks like we might get that pullback on the open. Another reason I'm doing the video tonight. So that's the first trade that we want to try and get done. ITT, really big sell-off here. Look at it start to smoke here, getting that 1 OSI indicator above zero. Great relative strength. Yesterday, you can see how the stock rallied off the low to close near the high of the day, even though the market closed at a new all-time low. The stock closed off of its low. Well, what makes it so special? Well, first of all, it's a defense contractor, so I don't believe that the government's going to let a defense contractor go under. Second of all, look at this fundamental rating. Fantastic. Great earnings growth, good valuation, good analyst ratings. And we've got a fantastic balance sheet, almost $7 in cash, $2 in debt. Yeah, they can get through this, no problem. Look at this forward PE, 9. 9. It's cheap. This stock is dirt cheap. We want to buy it. I want to buy it right here and right now. You can see that the stock has been down to the $36 price level. We are going to try and sell the $35 puts. And I'm going to go into the staged order screen. We're going to try and sell one of the ITT April 17th $35 puts, and we're going to try and get 70 cents for it. So I'm going to go back into the trade screen. I'm going to take a look at ITT, go into the April 17th expiration, going to go down to that $35 strike price. Zero bid, offered it $1.10, which actually, when I was looking tonight and doing a lot of my analysis, I'm looking at a lot of stocks. Zero bid, zero bid, zero bid, zero bid. All the market maker firms are already pulling their bids for puts because they don't want people coming in and smashing their put bids, knowing that the market's going to go higher and that the implied volatilities are going to come in. So on all these out of the monies, they don't want to have anything to do with them. They are not buyers. So we've got a zero bid offered at $1.10. We're going to try and get 70 cents for it. If we've got a $35 stock and we have to put up 20% of the strike price, that's going to come to roughly $7. If we can get 70 cents for it, that represents a 10% return. That's what I'm really gunning for. 10% return in less than 4 weeks. I'm all over it. Yes, please. I hope I get filled on this. So we're going to sell the ITT April 17th, $35 put. We're going to try and get 70 cents for it. So that's trade number 2. Trade number 3, SQ. They process transactions. Transactions going to be fewer with everybody sitting home? Yeah, probably, but they've got a great business model. They've got a lot of growth. You can see this long tail under body here. That happened actually on March 18th, a long time ago. We had a new market low yesterday. Look at the stock closing higher than the prior day's close on one of the weakest days in the market. That was a sign that this stock wants to go higher. It's probably going to go higher tomorrow. Still showing a little bit of relative weakness, but if I went into an H2 chart, it probably would already be strong. I like this, and I think we can go way out of the money on this as well. So we'll take a look at that stock ER, get a little feel for what kind of cash they've got. Yes, more cash on their books than debt. This is a high growth stock, so you can expect a fairly rich forward PE of 30. We should also be able to get a little bit of distance on this one and sell a little bit farther out of the money. So we'll go back into that chart. We're going to click on trade and we'll bring up SQ and we're going to go into that March 17th expiration. And on this particular one, go to the staged order. SQ, we're going to be selling the April 17th $30 put, and we're going to try and get 60 cents. That would be a 10% return. So where does that put us? Look, we would have to be below the low that was established on March 18th. Not even yesterday when the market made a 3-year low, we're below that by a good $3. Yeah, absolutely. Love that trade. All over it. Okay, so let's go in and take a look at the trade itself. We'll take a look at the premium, see where they're at. Well, look at there. 60-cent bid offered at 70 cents. I bet we're going to get filled on this right away tomorrow morning. And goody goody, if the market's down and the stock pulls back a little bit, maybe we'll even get more for it. Love this trade. SQ, we're looking to sell the April 17 $30 put. We're going to be bringing in 60 cents for that naked put. Trade number 3. Trade number 4, SWKS. So you can see it getting pounded right in here. And that also was back on March 16th. So the market makes a new low yesterday. What do we see here? Oh, look at that, a bullish hammer. Stock closing on its high of the day after the market makes a new 3-year low. Higher, higher, higher. Whoosh. Look at that rally today, closing on its high. Yeah, baby, this one wants to go. I'll probably be day trading this one tomorrow. Stock ER, let's take a look at that balance sheet. Cash per share, $7 per share. Debt, less than $1 per share. Forward PE of 10? What? Yeah, got to be all over this. So, what are we going to do with it? Click trade. We're going to go into the staged order screen. We're going to take a look at this. See what we can get. We're going to sell one of the April 17 $70 puts. We're going to try and get $1.55 for it. Okay, so we got to put up $1. Well, $1.40 for this put would put us at that 10% range that I like, but I think we can get a little bit more than $1.40. You can certainly go down to $1.40 and still be happy with this trade. Way happy with this trade. So let's take a look at where that puts us here at the SWKS puts us at the $70 strike. Look, that was the low. 69 was actually the low about a week and a half ago. So yes, we would be in the money if the stock pulled back to that level. It's at $87 right now. And I showed you that fantastic balance sheet. You know, we've got a ton of cash, $7 in cash, less than $1 in debt, trading at an incredibly low forward PE of 9. I am all over this one. Click on that April 17th expiration date. Let's go down to that $70 put, see where she's at. Look at that bid, 15-cent bid offered at 370. If we split that bid ask, we're still at $1.50. We would still be bid side. We're going to get filled on this one. I'm pretty dang sure of it. So really like that. Let's go back over that trade. We are going to sell one, or not, we're going to sell as many as you want. We're going to sell the April 17th $70 put on SWKS, and we're going to try and get a $1.55 for these options. Yes, you can go down to $1.40 on these. I still think it's going to be a fantastic trade. It will generate a 10% return to you. So, got to look at that stock ER one more time. A 10 forward PE, $7 in cash, $1 in debt. That's a good one. Boy, I like that stock. I want to buy that stock tomorrow. I'm going to be looking at it for a day trade tomorrow. Yelp. They have all sorts of ads that they put on the internet, very low overhead, people able to work from home. So you can see here, this stock has been in rally mode for a week. Yesterday, the market makes a new 3-year low, stock higher. I've been having my eye on this one, so this is not new to me. I knew this was going to be a really good one. In fact, I saw it when I posted the ZS trade. Can't remember if that was this morning or yesterday morning. Anyway, really, really nice. Let's take a look at that balance sheet. Stock ER, cash 574 per share, debt 323 per share, 16 forward PE, not outrageous, really good balance sheet. Yep, I like it. So, take a look at that chart one more time. We'll go into the staged orders and let's see what we've got in mind for this one. We've got the Yelp, sell one of the April 17, $15 puts, get 65 cents for it. We know that on this one, we've got to put up $3. This is going to be a huge return for us in terms of what we have to put up in margin. So the stock is at $21. We're going to be selling a $15 put way the heck down here. Let's hope we get assigned on it. The stock has been down there, but look at the relative strength coming up off of this low. This thing's going to poke into positive territory maybe tomorrow. It's probably already in positive territory on a 2-hour basis. But yeah, this is really, really good relative strength. So we're going to sell the $15 put on Yelp, and we're going to try and get 65 cents for that. So going to go into the trade screen. We're going to open up that April 17 option chain. We're going to look at those $15 puts, and there you can see they are 50-cent bid, offered at $1. I think 65 cents is doable, probably right on the open tomorrow. We could be getting filled at better prices on all of these if the market is down, say 20, 30, 40 S&P points, which is not unusual these days. We could get a really nice pullback in some of these and get a really nice fill on the open. In some cases, because the stocks have relative strength, they may only pull back for a minute or two and only give us a very brief window of opportunity to get these trades done. That's how SHOP was earlier this week. If you did not have that order working, you did not get filled. Place the orders before the open. I cannot emphasize that enough. You will be left holding the bag if you don't get these orders working. Okay, so I hope I've made that point loud and clear. Those are trades for this week. I got to get this video rendered, got to get them out, and your trades are all in the staged order screen. So if you can't recall what the heck I was talking about, you can go into staged orders. If you want to submit these orders very quickly to your brokerage firm, you can do that. Just click submit, 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 and they're gone. Now, what I would suggest is for most of you, you'll need to calculate how many contracts you want to do of each one. So you will need to modify the order and you'll need to modify the quantity. So you might want to do that ahead of time. You may want to configure your own orders using the trade ticket right here. So either way, what you could also do if you feel more comfortable with this, click submit, get them all working. They're all GTC orders. Then you could go into your brokerage interface, adjust the quantity, and click submit again and have them working for tomorrow morning. But regardless, I hope you watch the video tonight, or I hope you get up early tomorrow morning and watch the video. I'm sending you all emails, so you should be aware that the video is coming out a day early. We got to strike while the iron's hot. These option applied volatilities are not going to last long. I suspect that the market is going to put in a low here and that we are going to see a rally. These are great stocks with fantastic balance sheets. Gosh, I hope we get assigned on them. that would be even better because then we're going to make a ton of money as these stocks bounce and we'll be selling calls against them. Good night. We'll see you in the morning.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.